Hey, what's up, everybody? A lot to discuss this morning. I'm going to talk about 0 days to expiration options, how dangerous they are, but how much money you could make from them, and how to properly enter and exit. Again, 0-day options. Also, I'm going to talk about a key market indicator that I'm using. The same way I used to use the healthcare ETF, I've got another ETF for industrials that tells me the market's not crashing, that all we're doing is consolidating for the past week. And I'm going to show you why and give you my proof or my belief. I'm going to talk about some earnings that we had this morning. And then I'm also going to talk about the SPY and my predictions in the SPY. So if you joined me yesterday and I said downside on the SPY could be 394 or 393, because that's been the bottom for the past week, understand if we're going down, it can fall 20 or 30 cents under the support level and then quickly bounce back up. So what did we see yesterday? Well, we did test the 393 and then we dropped to 392.70 as a low. Well, there you go. 20, 30 cents under the support area, quick bounce higher. Yes, the market struggled yesterday, but I told you, I believe we're seeing consolidation. So let's just jump into my tracker right away. Weeks ago, months ago, I used to mention the XLV, which is the healthcare ETF, because there was a sector rotation. And as long as the healthcare ETF was going up, the market wasn't going to crash. It wasn't going to be a bear market. It wasn't going to go down. So my new tracker these days is the industrial ETF. I've been watching it for probably about 2 weeks now. I've mentioned some industrial stocks lately, and I'll mention them again. But my tracker for the entire market, consider it a cheat sheet. So everybody that's watching right now or watching later, now you have my cheat sheet. You look at the XLI, okay? It's the industrial ETF. Industrial stocks have been extremely beaten up over the past year. So we're talking about stocks like Cleveland-Cliff, CLF, X, which is US Steel, AA, which is Alcoa. If you look at any of these charts, and you'll see, yesterday, they tried to sell off like Cleveland-Cliff. I think it went down to 13 and change, popped, or maybe that was 2 days ago, popped back up to the $15 range. Remember, I was talking about how interesting it looked at like $14.14. Then it went to $14.50. Then it went to $15. Then again, a day or two ago, it dropped hard. They were attempting to potentially sell the market this week. But what happened? Consolidation. The same way we bounced off the SPY at 392.70, and we found support at 393 again. That's what we're seeing. So I'm going to use that information about the SPY to talk about 0 days till expiration ETFs. Okay, so let's just transition really quickly. 0 days till expiration ETFs, extremely risky. Why? Because if you're wrong, you're instantaneously going to feel the pain. Meaning you're like, oh, the market's going to go higher, and the market drops, and you have no time left because your ETF, your option expires end of day. And if you're using Webull or one of those not so great services, I like Moomoo myself. We probably have a Moomoo link below. But if you're using Webull or Robinhood, they're going to sell your option for you at 3:30 p.m. So even if you're correct and your option's going up, Webull, Robinhood, 0 days till expiration, they're going to sell it for you 30 minutes to market close because they think they're doing you a favor. Okay, so 0 days to expiration ETFs. Let me come up with an example. I'm going to show you my trade yesterday and what I was thinking. Now, after I traded yesterday, let me just pull up my Discord, or our Discord. Sorry, it's not mine. So right here, you can see the SPY was trading at 393.74, and I was already up 17%, which means I basically grabbed great entry. I was looking for the bounce at 393. That's before it went down to 392 in the afternoon. So understand, I'm looking for the bounce. I see the bounce. I got great entry. I missed calling the bottom by about 3%. Again, when the SPY was struggling, as you can see, my position was up. Let's just blow it up here. SPY was struggling under 394. Position I was in was up 17%. Now, I sold this position at $1.12 each. I'm in at 80 cents. I sold at $1.12. It went higher. But understand, if you don't sell, it's like riding the elevator, okay? So in at 78, sold at $1.12. That's a $44 per contract, 21 contracts. It's close to $900, okay? I also made 10% on Plantier. That wasn't it. Why did I sell? Because the SPY rejected VWAP, as you can see here. So this is just information that I give out. Now, what happened after, okay? After I sold this position, here it is. I sold for $1.12. As you can see, let's blow up this chart. it went as low as $44 a contract. So again, I sold right in this range here before 11:30. It went, as the market crashed, to $44, right? $44. What happened after $44? It went to $1.44. So it went up 200%, and it actually went all the way up to $1.80 per contract, maybe higher. So understand, here's how it looks when you're trading 0 days till expiration. I'm going to tell you which options I like to trade when I'm going 0 days till expiration. But here's how it went. I'm in at 78 cents, bounced up to 117 as a high. I sold it 112. After that, it dropped from 117 all the way to $44 a contract. And if you're holding the position and you're in 0 days till expiration, you must have balls of steel. Meaning you can't be like, oh God, I'm going to lose everything, and sell it. If you scare sell it and you're not following your strategy, you're going to lose money. So that kind of trade is not for you. You must have confidence in your position. You must believe that you got a great entry and that you have to know when you're going to secure profit. So again, if I had waited 78 cents, $1.17, $44 each, up to $1.80 each, or $180, which this move right here, 350%. So please, when you're trading 0 days to expiration, you want to buy out not in the morning, because in the morning you're going to pay more for IV, more for the IV, more for the time or the potential that it can go up and be in your direction. All right. So again, how did I trade yesterday? I'll talk real quick about that. When I thought the SPY was bottoming at 393, which it's shown support, I said to myself, the SPY could push 395 and there'll still be some time left in my options. That's where I came up with these options should be worth over $1, $30, $1.40, something to that extent. So when you follow an options chain, I like to choose something right around the money. So 394, if we push to 395 and a half, maybe a 395 option. The point is, you have to call the bottom if you're going to buy calls, or vice versa. If you're looking to buy puts and you are bear in this market, I've told you before, we have excess supply of the SPY at 398 or a little under. I think it's 397.81. So you would say, okay, we went to 398. It should retract, and it probably will. That's the point when you want to buy your SPY puts, not after it retracts and it's down here, because you're already chasing, you're already paying a little more premium because it's moving in your direction. All right, so that's why you have to plan ahead. All right, so we spoke about my key indicator. Used to be XLV, which is healthcare. Now it's XLI, which is the industrials. Okay, as that's going up, and you can see that's been consolidating. That is why I believe the market's consolidating. Okay, so if we are seeing consolidation and we see the SPY at 395 pre-market, let's understand the downside support will be 392.70 or 393, where we saw yesterday. The previous week, it was 394, 394, 393, 394. So there is a key level of support on the SPY. So everybody that's a bear, and I'm a long-term bear, we're going into recession. Everybody that's a long-term bear, you can still be a short-term bull. I understand we're going into recession next year and shit's going to get worse and shit's going to hit the fan. However, in the interim, we can run on the SPY or the S&P over 410, meaning over 4,100 on the S&P. So that is what I'm preparing for. That is my strategy. I actually am short-term bullish, long-term bearish on the market. I think we're going up. We're going to test 410 or 420, and then next year the market's going to drop, and we'll be back at the 370 level. Understand, just because you think we're going to 370, it might happen February, March, but we're probably going higher first, only because I believe we've seen consolidation. I'll mention some stocks real quickly that I believe have consolidated. Now, we know Tesla. Tesla's been selling off. Elon took over Twitter. He's been selling Tesla in, October. He sold some in the very beginning of November. I mean, when I say some, I mean like $3 billion worth of shares. It's putting downward pressure on Tesla. Tesla, which I did a YouTube video on about 6 months ago, I said had a forward PE at the time of 72. And a more proper forward PE for Tesla would be somewhere around 40. Well, yesterday, Tesla's forward PE, forward price to earnings ratio, hit 40. So for me, down from 72 at 40 is a time to buy. Now, Tesla's not just going to flip around really quickly and have a change of direction. So I would more appropriately like to go into some bigger tech. I'm looking at Google, which I entered a position yesterday, and I mentioned it on Discord. I'm looking at Amazon as we go into the end of the year. Who's ordering presents? If you're ordering presents on Amazon, so are 200 million other people. And then another one I mentioned yesterday was Zoom and how their forecasting would probably miss. They were off yesterday. The algorithms told you Zoom was going down. Zoom reported after the bell, and it's off 9% this morning. Now, I won't touch Zoom today because easily institutions can say, okay, I'm going to buy the dip on that one. Now, Zoom's dip is not like an Apple dip, a Google dip, or an Amazon dip. Those companies have earnings. Those companies have cash. So Zoom is not falling into the same category. So again, if I'm looking at big tech, I'm looking at Tesla now with a forward PE of 40. Google, whose forward PE is probably around 20, and Amazon, whose forward PE is probably around 20. Understand, if the market turns bullish and we're at 395 on the SPY and it goes to 415, it goes up 6 or 7% by the end of the year, those tech stocks are likely to go up double that. Somewhere between 10, 12, 14%. So that's what I'm keeping my eye on. And again, I'm using my tracker, the XLI, to make sure there's no huge sell-off in the market. And if you missed it before, you have to go back and listen. So I mentioned Zoom earnings. Now we have some people on Discord or one individual that mentioned DraftKings. Hey, what happened to DraftKings? I was looking at the 1 hour, the 2 hour, the 4 hour. It looks terrible. You have to incorporate some of the news sometimes. So DraftKings yesterday at maybe like 1 p.m. Eastern or 2 p.m., whenever you see the spike in volume, came out and they said they have been hacked and about $300,000 from some larger accounts got illegally withdrawn. Okay, so DraftKings went like this and then bounced back. So what am I expecting? Again, if today is a bullish day and we're going to retest 398 on the SPY, and who knows, we might break through. Probably not because there's low volume. And I will explain low volume and what is expected in the market. But if you're buying out DraftKings till like January, I think you're safe. You've got the World Cup now. You've got the NBA. You've got the NHL. You're going to have football more, and then you have the Super Bowl. So yeah, if I'm going to be bullish a stock like DraftKings, I'll be bullish until about 1 week prior to the Super Bowl, because then everybody's talking about, oh man, DraftKings, Super Bowls, DraftKings, Super Bowl. When everybody's talking about it, that's when I want to get out. I want to be in on the way up, out when everybody starts discussing it, because then you know there are problems. All right, so I mentioned that. Now, Tuesday, before the bell, what do we have earnings? We have Analog Devices, we've got Best Buy, and we've got Dollar Tree. So here's an interesting one, because I'll point out the third that I mentioned, Dollar Tree. As we go into recession, as the economy continues to hurt and people have less money and people have more credit card debt, they shop at stores like Dollar Tree, like other discount stores, the dollar store, all owned under that umbrella. Understand, institutions have a major ownership of Dollar Tree. So I'm just going to tell you right now. So these are the things that I look at. So I'll look at Dollar Tree. I think it's off a couple percent, 3% pre-market. If you look at the company profile, you'll see that institutions own 101%. How do they own 101% of any stock? Easy. Somebody's shorting a stock, so it's a math equation. There's 100% equals institutions own 101%, somebody else owns a couple percent, and then 4% or 5% short interest. That will equal 100. The point is, if institutions own 101% and they want to manipulate the stock because they own the stock and they're like, Dollar Tree will go up next quarter, Dollar Tree will go up next year, we think Dollar Tree is a $200 stock, what will they do when it's off 3% today? They'll buy it. Now, they won't buy it like crazy. They won't push Dollar Tree from wherever it is pre-market. Let's just go to pre-market number. Let's say 158 and change to 159. They're not going to be like, okay, I'm pushing it to 190 after bad earnings. They'll be like, it closed at 165. It went to 158, 160, 162. They'll buy it in that range. They don't have to push it to 165 today, and they won't have to push it. But over time, over the next 2 months, if the market goes up 6%, 7%, you'll see Dollar Tree, snapshot this one, at $190 by the end of the year, 188, 190. Why? Because you have institutional ownership, you have a strong market. Again, the SPY will have to break 398 one of these days first. Okay, so we'll talk about the SPY again. I see we have some new eyes. So yesterday, what did I point out to Discord? All right, I mentioned the SPY's volume yesterday was 40 million. It was crazy, crazy light. Understand, a light day on the SPY is usually 65 million. An average day has a volume of 80 to 82 million. A busy day, 110, 120, 140 million, like if the Fed is speaking. But at 40 million volume, it's like if you go to a baseball game, instead of having 40,000 people in the stadium, you have 1,000. Now, I used to go to Marlins games, so I know how it is when there's 1,000. There's nobody around you. So there's basically room for manipulation, meaning a foul ball comes here. Shit, I can run a quarter mile and still get the foul ball, and it's mine. Same in the market. If there's no volume, if there's no interest buying or selling, it means it's easier for the market to be manipulated. It means if I'm going to take a short position and try and push the market down, there's nobody fighting back. Same way, if I want to pump the market and buy the market, no one is going to fight back on the downside because volume is so light. So on light days of volume, I don't see the market going to the moon. I don't see the market dropping to hell. What I see is head and shoulders, which means on light volume days, even for your stocks or ETFs, however you're trading, you're looking for support and resistance. If it's a light volume day, it's not going to break through to the upside or break through to the downside. So you're going to see a head and shoulders, which is why my 0 days till expiration trade yesterday on the SPY was great because I found support. I got in. I saw resistance at VWAP. I got out. Now, if I wanted to ride the elevator, I would have rode the elevator from in at $78 up to 117. Down to 44, right? I would have been down like 40 something percent. I would have been going crazy because my options expired yesterday. And then all of a sudden they bounced up another 300% back to $180. So I would have made out better, but I would have stressed myself out. So how I trade when I trade 0 days till expiration options is I'm looking for a 15-minute move or a 20-minute move. I'm not looking to hold all day. If you hold all day, you're going to lose out. You're going to stress yourself out. So when I play 0 days till expiration options, which I spoke about in the beginning of this video or the live stream, I'm looking for the best entry, which is either bottom on calls or resistance on puts. And I'm looking for a 15 or 20 minute, maybe a 30 or an hour move. But I'm certainly not looking to hold 1, 2, 3, 4 hours. Again, if I had done that yesterday, I would have been up 50%. Then I would have been down 50%. Then I would have been up 250%. No need for that. You go up 50% or more, you sell. If it goes down to $44 and you're watching the market because you have time to focus and you still like your strategy, which I did yesterday, I didn't have time yesterday because I'm looking for a new apartment. And that's why I'm not going to be able to trade that much today. But understand, if you're focused on this one ETF and you're day trading it and you're like down to 44, I'm going to see a bounce and you're in, you won't get in at 44 because no one's that lucky. No one calls the absolute bottom, but you're like, okay, it's at $52 on the way up. I'll grab it at 52. Boom, it went to 152. I'll sell for 200%. Yes, it went 60% higher than that, but you have to follow a strategy. In, out. When you see resistance, and resistance could be at the VWAP, whether it's your stocks or ETF, that's what you do. Gonna make it a shortened day today. Let's look for questions if we have any questions. Understand, if you're on our Discord, you get 7 free days if you sign up. You have to verify yourself. It's not like you join and they're like, 7 free days, here you go, happy birthday. What you do is you verify yourself. You don't have to put a credit card, and you get all of our stuff for free for 7 days. You see if you like it. The main reason I mentioned that is I'm finishing up soon. But Romeo, who's been straight fire lately, calling the market, is going on live at 9:15. So what he does is he goes on pre-market and he's like, okay, so I'm looking at Apple, I'm looking at the Qs, I'm looking at this. He talks about his strategy first, and then he watches the markets. Now, he's a candlestick guy, so he's tracking the candlesticks, and he is so good about it that right before something's about to go up, he's like, all right, let's enter in here, gives his price entry, goes up. He's like, it's up 11%, up 26%, up 34%, up 40%. Okay, take profit. He's not one of those guys that just touts it like, yeah, I'm so gold and I'm nailing everything. He's telling you when you should take profit. It's okay to scale out. When he's on the wrong side of a trade, he'll mention a stop loss. All right, how to limit your loss. It's all about money management. Last but not least, I kind of led into this. I've got to look for an apartment soon. I got a 10:30 meeting. I'm probably going to be busy for about 2 hours. I won't trade till at least 1 or 2 o'clock in the afternoon. And we know it's a shortened week. So I might play an overnight swing trade, like maybe at 3:50 p.m., swinging to the next day. If I think it'll be bullish on Wednesday, or if I think the market will sell off, I will only know towards the end of the day. But here's the key 2 points today. Number one, make time to focus. And when I say that, I mean have a complete strategy. If you're going to enter a position, you should have a 5-minute rule, which means you could technically wait 5 minutes for a better entry rather than jumping in. If you're that anxious to enter a position, I've got to get in right now, it's probably not a good trade unless you're trading a 0 days till expiration option, because timing is crucial there. But in most cases, like I'll give my example yesterday with Google. I bought some Google options out till next week because, again, I am bullish the market. Bullish Google, Amazon, Tesla right now. I believe we're consolidating and that we will push higher. But what I could have done is waited for the SPY to come down and got a 50-cent better entry on Google's price. My option, I probably could have got maybe a 20-cent better entry, which would have been about 8 or 9%. Again, my option expires next Friday. I mentioned as I was buying it, I'm good because I think Google will go up. Google's up pre-market probably. Let's just check it. See what Dollar Tree is, right? So where's the market this morning? Okay, SPY's up 50.5%. So we're sitting at a morning pre-market high, 396.60. Understand 398 or slightly there under. Let's just call it 398. Could easily be rejection. If the SPY passes 398 to the bullish side and you see 399, even if it retracts, understand it's going to break higher. If it breaks 399, whether it's today, this afternoon, tomorrow, Monday, Tuesday, Wednesday, it's going higher. And when it does, 401 is the next level. And when it breaks that, 405, 409. Yeah, we could be in December when these numbers hit. When 409 hits, we could be in December. But you need to plan ahead. Now, Violets, I see you there watching today. I asked you to please, if you had any extra questions, make any comments. I know 0 days till expiration options. Hopefully you caught that. If anybody else has any questions, please let me know. Please hit the like button. Not too many people hit the like button. I'd appreciate it. You're all watching. There are a lot of you out there. YouTube is analytics. So again, back to Romeo's doing his 9:15 live stream. I'm here right now. Second one is don't rush. Now, I've mentioned this for 3 days straight. I used to talk about patience, 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 but it's different. Patience is like your grandmother. Don't rush just means, shit, you have time. Don't get overly anxious about something. Me, I'm trying to be as efficient as possible. So when I lay out my days, I'm like, I'm going to see my kids. I'm going to do this. I'm going to drive here. I'm going to go to the supermarket. Then I'm going to go to the bank. Then I'm going to do this. Jesus, I make myself nuts with the planning and the strategy for my daily activity. Whereas if I said, don't rush, I would just take my time and not stress and enjoy myself that much more. It's the same with trading. Do not rush into any trades. You're going to make yourself crazy. Give yourself enough time. And it's true. If you just repeat the words, don't rush. You're about to buy something. Don't rush. It's $88. Okay, don't rush. Oh, 5 minutes later, it's $80. That is so much better. All right, so people are asking about Disney. Let me see if I can actually pull up a Disney chart. I would have to remove that, stop sharing the screen, and I would have to share my screen with TradingView. So here we go. Let's see if that works. I'll go back here. I got to add it to the screen. There we go. Okay. So, okay, there it is. Okay, so when we get the SPY up, let me just enlarge it. Let me pull up Disney. Let's add it first because I don't know if I followed Disney here. So Disney moved the other day. Did I add it? Oh, there it is. Okay. So Disney is under $100. It went as low as what, $90 the other day. Let's go to a 4-hour chart so we can really grasp it better. Make sure you guys are viewing this with me. You are. Okay. So Disney, major sell-off into earnings right here. Here are earnings. What do they do after earnings? They sold it. Why? Because Disney is losing $1 billion in their streaming service, maybe more, and things don't look like they're getting better. However, what people underestimate is how much damn money the Disney parks used to bring in. Before there was a streaming service, Disney parks brought in 90% of the company's revenue. Let's not mention the movies that they own. They own ESPN, all the sports channels. They have a great revenue stream. So what are we seeing with Disney is earnings, you had a sell-off. Then the company announced they were replacing their CEO, right? So what happened? We spiked up higher. Everybody that wanted to sell, that didn't sell after earnings, took advantage of selling here. So what do I actually think is going to happen with Disney? I do think Disney will go higher. I think if you have a long-term, if you want to go out till, let's say, next December, you're going to get 30% on Disney. I think Disney will be at 125. So it's at 95 now, 125, $30 move higher. That's got to be like 34%. Now, if you're trading options, I'm not trading options on Disney. Why? Because this is what we've seen on Disney right now. Fell after earnings. Now, generally, there's a bit of a bounce after that fall, and then it drops further and consolidates. Disney still needs to find the bottom, and I'm not sure the bottom's in for Disney. Even if the market rips stronger, Disney can hover here, and you'll be like, shit, everything else is up 5%. Why is Disney not up 5%? So, yeah, I mean, I would rather, if I was going to be in a Dow play, I would rather be in Boeing, okay? I mentioned airlines a few days ago, and as they're selling airlines, right, consolidating, UAL is still going up. Delta Airlines is still going up. Boeing is still going up even after it consolidates. So I'd rather be in an airline play than I would like a Disney play or a casino play. Las Vegas Sands, Wynn Casino, they could go higher, but they have exposure to China. Okay, you know who doesn't have exposure to China? Delta Airlines. United has exposure to China because they do European travel across the ocean. But if you want to find an airline that doesn't, well, Boeing, they're making planes, they're selling planes. It doesn't really have exposure to China. Well, they already sold planes to China. Okay, another stock. All right, NVIDIA. Let's see if I can pull up NVIDIA. So let me pull it up first. Let me add it to the watch list. NVDA. So I happen to like NVIDIA just as a company. Why? Because they're first in their industry. So I've got the 4-hour chart here. Let me pull it up for everybody to see. Again, I use the 4-hour chart because it goes back a number of days. So what we can see is NVIDIA right here dropped off. Boom. Down here, it's going to fill this gap at some point. What did it do? It filled the gap. So let's go more to a 5-minute chart. Let's just look at it. Let's see what NVIDIA did yesterday. They were buying NVIDIA down at this level. At 151, it had support. At 150, it had support. All the way up to 152, it had support. What did they do? At 150, here we go. At 155, they were selling it. At 155, they were selling it. At 154, they were selling it. So NVIDIA, I could tell you, short term, if I'm looking at this stock, it has support at 152. Doesn't mean I'm buying the stock at 152. It means if it breaks support and it goes to 151 and there's some crazy drop, that's a great entry. I'm like, support's at 152. It's at 151. Same thing true with the SPY. When it went to 394, I'm like, that's generally where our support is. When it went to 393, I'm like, great entry. I get excited about this. So let me just see where NVIDIA is pre-market. Again, SPY looks like it's ripping. NVIDIA pre-market. Okay, 154. Yeah, I would be careful. Again, if the markets are super green today, NVIDIA, 157, okay? However, if the markets do a head and shoulder thing and the SPY does not pass 398 on the upside, then you're going to see NVIDIA do a head and shoulders thing too. 155, 153, 155, 153. Okay, yes, I did agree with you on Moomoo. Yes, Moomoo is great. All right, Etsy, again, I would love to have a little more research. And if I knew these stocks a little better, I could tell you what I thought. But what I'm doing is zooming in. I'm looking at the chart. I'm looking for support and resistance, and I'm trying to help you. Etsy's a tough one. Etsy's light volume stock. The average volume is 3 million, which means it could easily be manipulated. Now, when you look at an Etsy stock, and you can see yesterday it finally turned around. Again, if you believe the market in general, all right, the NASDAQ, the Dow, if you believe it's consolidated and going higher, then yes, Etsy's a stock you could buy and an option you could buy. And if it's a green day in the market, Etsy's going to have a green day. However, if the market's not done throwing up on itself and it's going to consolidate at a lower level, then yeah, I'd stay away from that. Another question. I think we got one right here. Something about crypto. Okay, yeah. What do I think about the state of crypto? Oh, so difficult. All right, so crypto. Let's just talk about the big boy, Bitcoin. Bitcoin 16,000. Bitcoin was 16,000. What was it? 2018. We shot up during the pandemic when everybody was day trading and into crypto and thinking that everything was going to implode and they wanted to own crypto. However, the problem with crypto is now the U.S. wants to regulate it. Some other larger institutions believe regulation is needed, especially when you see, FTX going bankrupt, other companies going bankrupt, people not getting their crypto, their money out, not being able to withdraw, having penalties, things to that extent. So I would be extremely cautious. I'm a long-term believer in crypto, but I've mentioned this. I only want to be invested in coins that have a purpose, like a Uniswap, like a Polymatic. I don't want to be in a Shiba Inu that does absolutely nothing. Dogecoin, I guess they have smaller purposes now, and Elon is basically the reason for that anyway, but we'll move on from that. All right, what about Plug Power, Tesla? Okay, Tesla I mentioned. Fiverr I don't follow. CaliX I don't know. IPI is a, what is that? The potassium is the IPI. Oh yeah, potash, right. Yeah, again, volume too low on this one. I'd rather be in Mosaic if you want to look at that. Fiverr, again, I don't really know. Plug Power, interesting. Plug Power will move with a NIO, Tesla, Rivian. I've seen support for Rivian and Lucid lately. I believe Plug will have support. I do not believe Plug is going that much lower. I think out of the stocks you mentioned, I'd most like to be in Plug. Now understand, Plug is a spec play. So the market needs to go up. The Russell needs to go up for Plug to go up. When you're looking at Plug, you're looking at Plug, Roblox, you're looking at more spec plays. Lucid, maybe in a firm or an upstart. Again, companies that don't necessarily have earnings, but have a decent business. That is a Plug to me. Decent business, no real earnings yet. But yeah, will they have earnings? Everybody's going EV. If Plug is the number one player in EV, then yes, it might take them years to get where they need to be. And let's remember, Plug shot up to like $72 during the pandemic. How ridiculous is that? All right, come on, people. Don't be like everybody else. Yeah, hit the like button, people. Share the video. That'd be awesome. That's cool. What do you got, Fredo? You got Starbucks. Starbucks, I mentioned, had a top side at 99. So let me just see where Starbucks is. I think it went down to 97. I mean, you can see, again, inflow, Starbucks. They're still buying Starbucks. Volume is not crazy. So would I want to be in Starbucks? No. To me, it's like a Disney. All right, Starbucks already sprinted up. Disney already made a move on the CEO change. I want to be cautious of those. I would rather be in a Boeing or United Airlines, something like that. Starbucks, if they do continue to buy Starbucks, where could it push? I mean, we're at a 3-month high. It rejected 112 a year ago. So, I mean, if the market is bullish, if the SPY goes up 7% before the end of the year, if Starbucks gets to 112, I would be selling. Other than that, you could ride the market up. It's going to be bullish. We hit consolidation. Could the market drop? Yes. Russia bombs the nuclear power plant and there's a dirty bomb. Yeah, the whole world would be scared. China does something to Taiwan. Whole world is going to be scared. North Korea does something over South Korea or over Japan. They fire a missile and it hits Japan by accident. Yeah, the whole world will be scared and the market could drop. Other from those scenarios, or other from like an oil field blowing up and oil pricing going up or something like that, the market's consolidating. But if something crazy happens, if there's so many things that could potentially happen to drive the market down. Other than that, please join Moomoo, join our Discord. Romeo's going live in 12 minutes. You go from me pre-market, where I'm talking about market direction. He actually talks about specific plays. So do I, but later in the day. So please join us on Discord. Talk to you guys soon. See everybody tomorrow morning.